Hi, this is Saeed Asinan from Ahmed Al Akbari Chartered Account. Welcome to our e-learning series. Today's our topic is on corporate taxation affecting the free zones. You know that corporate tax has been implemented from 1st June 2023 and is now enforceable in mainland and free zone companies operating in UAE. There is a big debate and questions that whether the companies operating in free zones are subject to corporate tax or not, or whether what is the rate they are being will be applied on them, whether it will be 0 rate or 9%. With us is Ms. Alia Noor. She is an expert in tax and corporate law and working as a partner in Ahmed Al Akbar Chartered Accountant. She will be defining what are the terms and conditions which has to be fulfilled for the entities operating in free zone to avail the 0 rate taxation. To you, Ms. Alia.
Thank you, Mr. Sayed, and welcome to our corporate tax series. Yes, corporate tax has been implemented, and the normal tax rate is 9% applicable to all companies operating in mainland or free zone, unless that free zone person is a qualifying free zone person and is subject to corporate tax of 0% on their qualifying income, only subject to certain conditions. Now, defining what are the conditions to avail 0% corporate tax rate. First, they have to maintain adequate substance in the UAE. They have to drive qualifying income. They do not elect to be subject to 9% corporate tax. They comply with arm's length principle and transfer pricing documentation requirement. And their non-qualifying revenue does not exceed the de minimis requirement. And they prepare audited financial statement for the purpose of corporate tax law. Over to you, Mr. Asif.
Thank you very much. So there are 6 conditions to fulfill for a free zone company to avail 0 rate taxation. Can you define what are the adequate substance and the qualifying income, and lastly, the de minimum requirements?
Sure. Adequate substance is nothing new. We have been seeing these requirements, complying with this requirement under ESR regulation as well. So adequate substance means that the entity undertake its core income generating activities in a free zone. They have adequate assets. They have adequate number of qualified employees, adequate amount of operating expenditure, and activities can be outsourced to a related party or to a third party, which should be also in a free zone. Whereas qualifying income includes the income derived from transaction with other free zone persons, as well as domestic and foreign source income derived from conducting any of the qualifying activities except excluding activities, and they should meet the de minimis requirements. Now, qualifying income includes income derived from transaction with free zone persons, except for the income derived from excluding activities and from non-free zone persons as well, but only respect of qualifying activities that are not excluding activities. Now, coming to the part which is the most important, what are qualifying activities? Now, that includes manufacturing of goods, of materials, processing of goods or materials, holding of shares and other securities, headquarters services related to related parties, logistics services, reinsurance services, ownership, management, and operation of ships, financing and leasing of aircraft, including engines and rotables, certain activities which are subject to regulatory oversight of the competent authority in the UAE, like fund management services, wealth and investment management. Another part is distribution in or from a designated zone that meets the relevant conditions, and any activities that are ancillary to the above mentioned activities. Now, there are certain excluding activities which are treated as qualifying income, regardless of whether the income is derived from a free zone person or as a part of undertaking the qualifying activities, such as natural person. Income derived from transaction with natural person is an excluded activities, except for the transactions in relation to qualifying activities, which we have seen in the previous slide. Secondly, the banking activity subject to regulatory oversight of the competent authority. Third is insurance activities that are again subject to regulatory oversight, except reinsurance services. Fourth is the finance and leasing activities that are subject to regulatory oversight of the competent authority in the state, except treasury and financing services to related parties, financing and leasing of aircraft, including engine and rotables, ownership and or exploitation of immovable property other than commercial property located in a free zone where the transaction in respect of commercial property is conducted with other free zone persons, or any activities that are ancillary to activities listed above, ownership or exploitation of intellectual property assets. Now, what is a de minimis requirement? De minimis requirement is applicable because in a qualifying free zone persons, there will be two components of their revenue. One will be the qualifying income and another will be the non-qualifying revenue or income. So the de minimis requirement shall be considered satisfied where the non-qualifying revenue derived by the qualifying free zone person in a tax period does not exceed either 5% of total revenue of the qualifying free zone person in that tax period or a fixed amount that is 5 million, whichever is lower. Over to you, Mr. Asif.
Thank you, Ms. Alia. In our further videos, we will be defining the calculation in elaboration about the requirements for zero rate taxation, and keep tuned for knowing more about the corporate tax in UAE. Thank you very much. Thanks for listening to us.
Thank you.